You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. If you're paying $0 to trade options, you're paying too much. That's because at public.com, you can go a step further and earn rebates on every single contract traded. No commissions, no per contract fees. That's table stakes. When you place an options trade at public.com, you not only don't pay, you earn a rebate. And those rebates can add up fast. Public is the only options trading platform where you can earn rebates. You literally won't find a better deal. So, switch to Public and start getting rebates on every single contract traded. Or stay with your current options trading platform and leave money on the table. The choice is yours. Public.com. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back. Once again, it is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the world of vol? Let's find out together, shall we? It is time once again for Volatility Views. My name, of course, Mark Longo from theoptionsinsider.com. Couple of things to remind you of right at the top of the show. First off, if you're not listening to the full network, man, you are missing out. Nearly a dozen other shows. And if you want to go above and beyond, you want to join us after Vol Views for a little bit of options oddities fun, I will be joined by the options guy himself, Mr. Brian Overby, to break down some awesome, unusual activity. I was lighting up our tapes this week. Only one place to get that. theoptionsinsider.com/pro is the place to go to learn more. As we learn who's joining us on the old Vol Views program today. First, we return once again to the dark, the stormy, the hellacious shores of Maine, where we are joined once again by the rock lobster, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show, sir.
It is a pleasure to be here, although I'm in North Carolina, but I won't be for long.
Oh, so the stormy shores of North Carolina, then.
Yeah, and actually, these are pretty stormy. I go from one set of stormy shores to another.
Yeah, you can't stay away.
It's quite stormy here in North Carolina.
You can't stay away from stormy shores. It's just your thing. Maybe you go inland. Try a landlocked vacation next time. Just try it.
You know what? And just let the rain come down in the trees, I guess.
Yes.
But I don't know. I somehow I've managed to live on a coast. I guess you can call Chicago the third coast. So most of my days somehow.
It does have quite the coastline here. So yes, we are an inland coast, but a coast nonetheless. As we keep on rolling out to, I'm not sure where he's beaming in from. Maybe he's beaming in from Indiana, maybe from the hinterlands of Chicago, maybe from Budapest. Who knows? Let's find out. He is Mr. Russell Rhoads, holding court these days at the Kelley School of Business. Mr. Rhoads, welcome back to the show, sir.
Western suburbs of Chicago. My new office that I go to flooded yesterday. So I'm working from the emergency backup area. Hey, Andrew, you visiting our buddy, the option guy, while you're over in North Carolina? I know I caught Andrew off guard right there.
Oh, is that Carol? I think he's in South Carolina.
Oh, Carol's in South Carolina. I'm talking about Overby.
Oh, no. Where is he in, where is he on the coast, or is he in Raleigh or something like that?
He's on the coast or something because he's got a houseboat. That's all I know. So,
okay.
I'm like a big city person. I think everybody in North Carolina all lives in the same exact spot.
Exactly, on the same body of water, this huge inland waterway, which is not totally incorrect.
No, not at all.
I'll be talking with him in a little bit, so I will ask him exactly where he is hanging his hat.
That's what I thought. I'm great at the lead-in segue thing. And now to Gary.
Yes, thank you. Thank you, Joan Rivers. And then, of course, holding down the UVX hot seat this week for the second time, but his first time really on the show proper. He did beam in for a special international vol segment. He gets the award today for beaming in all the way. He gets the Simon Award for beaming in all the way from Perth. Simon used to beam in from Sydney. He's beaming in from the other coast, Perth, Western Australia, where we are joined once again by Gary Norden, hedge fund manager at NN Squared Capital. Gary, welcome back to VolView, sir.
Thank you very much. Great to be here, all the way from sunny Perth. Well, not sunny right now because it's 2 o'clock in the morning, but all the way from Perth.
You get the award for the late night vol contributor. All right, we'll get going so we don't keep you up too late as we head right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we break down what the heck is lighting up our tape out there in the vol market today and indeed this week. And coming into the end of the week here, we're seeing a wee bit of red on the screens. Markets taking a breather after putting on a lot of green post-election. Pretty much all of them off about the same percentage. NASDAQ, S&P, and Dow all off in the ballpark of 0.25%. S&P a little less, Dow a little more, but all in that ballpark of around 0.25%. And all that red means our old pal VIX Cash actually firming up a wee bit since last week. We were at about a 13 even on the show last week. This week ticking up about 1.25, right at 14.25 when we kicked off the show. Vol of vol also firming up a bit as well, up to an even 100, up 13 points from where we were this time last week. So market's a little red, vol a little frothy, a little spicy, heading, if you can call a 14.25 spicy, listeners, heading into the weekend. But let's go around the horn the opposite of the way we started. Let's go out to the UVX hot seat first. Gary, we'll get to all the international vol fun in a second, but what's catching your eye in the broad vol markets this week, sir?
I think today's interesting. When I went to sleep a few hours ago, to wake up and see the VIX up here, it looks a little bit high to me, actually, frankly, given what's going on. I think it's a lot of it's just more of the same, which I think we'll probably talk about during the rest of the session, but I think that's what's going to be the way for most of the next sort of 2 or 3 weeks. So I think the VVIX is interesting. I think that ticking up gradually over the last sort of few days has been, I think, quite interesting as well. And that might be getting people a little bit spooked a bit now as well, I think. But generally, I think VIX looks a little bit high this morning. And I'm a little bit surprised it's so high.
I like that. That's commitment to the cause, sir. Taking a nap just to get ready to come back on for vol views. I appreciate that, sir. Well done. So you're refreshed and ready to talk some vol in the wee hours of the morning.
Absolutely.
As all good vol talkers do out there. As we keep rolling out to he just got a new office. It's already flooded, listeners. He's rocking some bad luck. So let's go to the secondary office of once and future Dr. VIX / VSTOXX. Mr. Rhoads, sir, what's catching your eye in the vol markets right now?
Just, I'm surprised that December's given us about 75 cents right now, relative to where spot's at. Actually, I say that and it bumped to 70 cents when I said that. So, but you never know what could happen this weekend. So I could see, I could see the futures market bracing a bit, just in order to have a little bit of room between, if you're going to sell some of those VIX futures going into next week. I can totally see the reason that there's a little extra premium in there. Russia fired a whole ton of stuff at Ukraine this weekend. Maybe they fire a whole ton more. Maybe Ukraine fires a whole ton back. Maybe, and now we got a new one in geopolitical chess. If anybody has a bingo card for 2024, so much has happened. I assume everybody's won at this point. But Syria falling apart, I guess if you really thought about it and thought about who is the backer of Assad, that probably is not that big of a shock. But again, all the dominoes keep falling around the world as far as geopolitical hotspots, and VIX is too young to drive. And for Gary, you have to be 16 to drive in the U.S.
You're right. It does seem, I should say, like there are a lot of interesting shoes dropping on the geopolitical front, but we've seen this movie before now, dare I say it. Unexpected, maybe unanticipated geopolitical event pops off, and VIX shrugs its shoulders, and the markets do not but rally. How many times have we seen this post-2020? So I guess file me as unsurprised, but still interesting stuff afoot as we go out now to the dark and stormy shores of North Carolina. Mr. Rock Lobster, sir, what's catching your eye out there in the vol markets this week?
What I would say is we are now market pretty close to all-time highs, like 6,100 SPX, so we're 1% away. And VIX 1, 2, 3 days. I you know what? It's just it's stubbornly holding up when you think it should be dropping. It's kind of like, The Godfather with Michael Corleone. Just when I'm out, they pull me back in. I'm paraphrasing it, something like that. But I feel like we should see like the low 12 handle at this point, and we don't. So why? Today is the 13th. A month from now is January 13th. We are getting into that, certify the election, Jan 20th, all that kind of stuff. So, I think there could be a little bit of that creeping back, because it's certainly not, right? It is certainly not realized vol in the index, because now we're actually now the 60-day volatility is below 11, 10-day vol is 7.5. So you can't really look at that for vol. Interest rate. And I think this inflation number, like there was some surprise in the inflation number this week. It's not going down anymore. Okay, so whatever you hear out of the White House, I don't know how they spin it, but it's definitely, the trend is not going down anymore. It's starting to tick back up. So yeah, I like slightly different cross currents, and bond market not liking rates either, even though they keep saying they're going to cut, bond prices keep going down. So anyway, I think, things that have scared the market, kind of the bond market collapse, as if the government doesn't follow through on some of these spending cuts, the current amendment where the new administration wants to do. That would be door number one. Door number two, yeah, this unrest in Ukraine. Same thing, because I think the last time we had a sell-off since the election was all Ukraine related, and that was SPX down to 58.50 maybe. So that could be in the back of trade, kind of in the back of traders' minds. Let me see here. I want to get that. Yeah, that was the low point for since the election was 58.50, right around there. So, we could get there again. Possibly, I guess everybody's starting to freak out somewhat. But I mean, for the most part, AVGO earnings were pretty good. They loved it. Market started off this morning pretty hot, and it just did not hold up. Actually, we kind of called this, Leisha and I, in our morning show. Like, it looked good, like the market looked good, but I don't like how VIX is not in the 12 handle for where we are. It should be there, but it's not. So that means there aren't enough people selling puts quite yet. And I think that's where we find ourselves. So it's just, you would think vol should be lower when we're at like all-time highs. You think we'd be in zone 1, the bottom quartile, but we're not. So I just have to say, I find that curious, and it gets my spidey senses up. And I think somebody in one of us may hear, I think it was Gary mentioned VVIX is by 100. Why? Who's buying that crap? Like, who wants to own VVIX or any vol and volatility when when the market is trading where it is? Okay, so you buy it because you think we're gonna, market sells off, but like almost 100 VVIX for where we are is quite a bit. So again, I find there's too many troubling signals. Then, of course, VIX expires on January 22nd, which is 2 days after inauguration. So that's almost it's too odd to have VIX expiring after that. But I have seen a lot of call buyers come in. I guess we'll talk about that a little later, but there has been some size call buyers on some strikes lately. So I don't know if it's 50 cent, but it's certainly somebody's buying calls.
Interesting. So the Rock Lobster saying VIX is still maybe a little too high, and Mr. Dr. VIX thinking VIX should be at least driving right now. So intriguing viewpoints as we keep on rolling out there into the land of the futures. Let's lighten up the tape over there on the vol surface this week. And coming into the start of the show, we had the VIX futures, at least the front portion of the curve, looking a little bit juicier than it was this time a week ago. D's future, which is obviously rapidly heading for the exit, up about 0.3 of a point. Jan ticking up more. We've been talking about Jan for a while as an intriguing little hot spot here on the curve. Jan's up nearly half a point from last week, 0.45. So Jan kind of off to the races, doing its own thing. If we go all the way out, let's go all the way out to August of next year, listeners, and see how spicy we get on the vol curve. And we get to a little bit north of 19.1 out there. So still not sniffing a 20 handle, but obviously looking a little bit steeper the farther out we go here on the curve. Gary, we'll start with you again, sir. I'm curious for you, how big of a driver in your analysis is the volatility surface, and what, if anything, is catching your eye out there this week, sir?
Yeah, I think it's. I think we're going to be in one of those situations now for a while that essentially, I don't think it matters what realized vol does. I just think that everybody seems to think that there's going to be a lot of stuff happening next year. Come middle or end of January, and I think everybody's just bracing themselves for a whole raft of announcements and things. So even in the next 1, 2 weeks or so, doesn't matter how low realized vol goes. I just think that to a certain degree, both implied and implied vol and the futures curve for the VIX are going to stay high. And that's what we'll probably see in the options flow as well. So I just think it's what we have to get used to. Ultimately, I think perhaps some of the longer dated ones, I think that could flatten off at some point, because you would expect if there's going to be some market moving announcements, they would probably happen quite early in the next administration. But I mean, you guys in the States would probably know more about that than me. But I think we're just going to have to get used to this environment now for at least the next 2-3 weeks or so, up until the event happens at the end of January. So I think this is the way it's going to be.
Yeah, we're getting back into that environment where a single tweet could change markets quite a bit, listeners. Remember those days, the heady days from 2016 to 2020? Well, you never know what tweet was going to turn the market. We're back in those days again, listeners. So should keep things at least interesting for the next 4 years from a vol perspective. Mr. Dr. Vic, same question for you, sir. What's catching your eye out there on the vol surface this week?
Surface, but just VVIX a tick over 100. As Andrew was talking, I threw into our little internal chat that maybe one of the reasons VIX has a 14 instead of a 12 handle is because there maybe there's a little extra demand for SPX puts going into 2025. Maybe this is the second to last full trading week of the year, and just maybe some institutions with us closer to highs are maybe putting on some hedges going into the first quarter of next year, which is something that would boost VIX. It also is something if the same sort of players are maybe taking a look at hedging against a quick move down. We know that VIX calls are one of the best ways to go about doing that, and that VIX call activity tends to drive the VVIX. So VVIX over 100, maybe that's a little bit of confirmation that it's not that VIX is elevated due to concerns over the weekend, but maybe VIX is a little elevated relative to where we think it should be because of concerns, 30, 60, 90 days out.
And Mr. Dark and Stormy Shores, sir, what's catching your eye out there in the vol surface this week?
You know what? Funny enough, with the option pit fair value indicator for the volatility surface, this last, I would say, week or so is the first time we have been at around a fair number. So this, of course, is based on my highly scientific looking at the VIX curve for years and years and years, making some observations, and then one of our smart guys created a regression line to match that. So anytime it kind of flutters above and around that, I feel like all the forward vols are kind of sort of out of sync relative to where you sort of like back month is a little out of sync relative to front month, if that makes sense. So the back month VIX future, a little higher relative to where VIX cash could be, or vice versa. The front end of volatility or SPX vol is relatively high to the back, given the absolute value of VIX. So this was all run at around a 12. So that way, when the market is starting to move a little bit and the futures are moving, helps kind of give me a sense of how, let's just say how prickly the market is, the market for volatility. So right now, it's very normal. So that is to say, volatility is priced higher in the back than the front, which is how it normally is. And with relatively low realized vol, you actually have like a normal high risk premium, which is kind of how the market trades when things are sort of good. So with all the stuff that we have just mentioned, things don't look too out of sync as it goes, I think, for the vol surface where we are. So it's like, okay, it's basically the market's pricing vol, some extra vol premium because something might happen, but that's sort of normal. And I think that's where we are. But it's nothing yet, I would say, that would get, that would get me excited. The only thing is I think VVIX feels a little relatively high, and that comes from traders buying calls in VIX. So that's what I would say with that surface. So kind of a little of this over here, normal vol surface, but still that relatively high vol in the short term.
All right, now it's time for us to cast our gaze outside of the shores of the U.S., across the pond, not all the way to where Gary is. That's a little too far. We're going to stop in between over there in the Eurozone for a little bit of the old international volatility review.
It's time to explore what's happening in the volatility market beyond our shores. It's time for the International Volatility Review. The International Volatility segment is brought to you by Eurex, home of Euro stocks, V-STOXX, DAX, and the German government bond-based Eurobund, Eurobabel, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European Volatility Benchmark, at www.eurex.com/VSTOXX.
All right, everybody. Welcome to the International Volatility Review. And kicking off the show here, we had our old pal VSTOXX closing this morning at 13 3/4. So for a while there was pretty much moving in lockstep, pretty much exactly even with VIX Cash. Obviously, VIX continuing to do its own thing throughout the rest of the session out there. But for a while there, that premium between the two, that distance was gone. That puts us down almost 3/4 of a point from where we were this time last week. Now, that may surprise some of you out there, given what Russell was saying earlier about maybe some escalating tensions over there in Ukraine, as well as some other surprise developments out of Europe this week. Surprise rate cut, aggressive rate cut out of Sweden. Half point they went over there, which is kind of interesting. So a lot of things going on over there in the Eurozone that are maybe a little bit head-scratching, maybe a little bit puzzling. Either way, VSTOXX doing its seasonal thing. Remember, this time almost exactly a year ago, listeners, December 15th of last year, we were at our 52-week low of 12.12. Not that far away from it right now. Obviously not quite kissing 12.12 yet, but VSTOXX likes to do its seasonal best, and so far it is living up to that, listeners. The high, of course, coming back on August 5th of this year, 31.16. Obviously, that's a long way in the rearview mirror right now, but yeah, it doesn't seem like a lot can really conspire to keep VSTOXX up right now. Mr. Rhoads, we'll start with you, sir. What is catching your eye out there in the international volatility market, sir?
There's a lot. There's an awful lot. So, I've talked an awful lot in the past few months about the there being differences, risk differentials between VSTOXX and VIX, and some of it's because we had an election in France, and that wasn't being paid as much attention to in the U.S. We had the U.S. election, which the U.S. volatility and VSTOXX were kind of elevated for. VSTOXX returned to a bit of normalcy a lot quicker than VIX did after we got the election result. Right now, the December VSTOXX is at it's at a slight discount to VIX, and the January VSTOXX is at a slight premium. So there might be something you could actually do calendar spread wise if you think something may be happening in the next couple of days. But as we go farther out on the curve, everything is kind of in line with each other. The one big differential in something that I don't think I've ever talked about on here, but much like there's a VVIX, there's a VSTOXX. And, we mentioned that VVIX is up around 100. The VSTOXX is around 80. So options on the VSTOXX are cheaper than VIX options as well right now. So the futures are kind of in line with each other. If you're looking for some sort of volatility spike that would impact all markets, you may want to be looking in the VSTOXX arena as much as looking in the VIX arena. Maybe even more so in the VSTOXX arena, because it has been shown that when we get a volatility event, the futures on VSTOXX tend to react more to the upside than VIX.
All right, let's keep going out now to the Eurex hot seat. Mr. Gary, sir, what's catching your eye out there in VSTOXX and international volatility this week?
Yeah, thanks. I think Russell made a really good point about the fact that the volatility of VSTOXX is quite low and much lower compared to the VIX. I think that is an opportunity. In terms of, I think most people are probably surprised by how VSTOXX has fallen, and it's sort of disconnected a little bit, particularly the last day or so from VIX. And I wonder how much of this is to do with the fact that Europeans tend to like longer holidays around Christmas time. And so there's, a lot of European desks will close for longer. And so maybe people are really looking ahead to that as well. whereas in the US, you guys tend to be a bit more hardworking. I think I can say that, and some of you guys will be in trading a bit more. I think generally there just seems to be, to me, so much more room for volatility events in Europe, even given the fact that we have this new administration coming into the US in January. There'll be a lot of changes. I think because on an individual stock basis, I think there's so many companies in Europe that are struggling. I think that the risk of downside shocks in European companies is harder, is stronger, than it is for US. I think US companies are generally doing better. And if the companies are doing better, there should be less chance that the index itself is going to fall. So I think that, there are some opportunities going forward there. And in terms of the geopolitical situations, obviously France is onto its next prime minister now, or certainly someone's been nominated. I expect that to get tested at some point as well. And there's in terms of Ukraine, I think most people right now are just thinking that there will be some deal done in Ukraine over the next sort of few weeks or a couple of months or so. I think that's sort of driving things in that sense. No matter what happens in terms of if there's attacks on Kiev or in the short term, I think most people now expect that the sides are going to be sitting around a table trying to do some kind of a deal within the next 2 to 3 months. And maybe that's one of the reasons why VSTOXX is falling. But I still think there's opportunity because the companies themselves and the economy is struggling. In most European economies are struggling. Like you mentioned, the 50 basis point cuts this week. Europe is struggling. So I think any opportunity where VSTOXX looks a little bit cheap is an opportunity.
I like it. At the end of the day, with all the various uncertainty, at the end of the day, it's really just Europeans like a good long holiday. I could certainly get behind that. That's why VSTOXX is coming in. They're just not there. They're already partying over there in Europe. I like that. I can get behind that analysis at the end. And you're right. Trump did roll into office on the pledge that he would settle it on day one over there in Ukraine. So we'll see what's behind all that talk out here at the end of the day. In a few weeks, as we keep on rolling, is there a lot of talk or is there some action in VIX options today, listeners? And the answer is, I guess your frame of reference. If this was back on the banger days, we're threatening 1 million contracts a day, you'd think this was mostly a lot of talk. Right now, the ADV is back below 700K, 698, down another 87,000 contracts this week. So in that context, 407,000 contracts is nigh on respectable, listener. That's what we're dealing with today. We'll get to all that fun in a second. First, let's break down our patented VIX Top 10 indicator, TM, listeners. What does it cost you to break into the top 10 right now? It costs you 202,000 contracts. By the way, we are back to 50-50 exactly. For a brief, shining moment in time, listeners, puts were leading the dance over calls in the VIX Top 10. No longer. We are back to 50-50, which in and of itself is a pretty aberrant thing. If you've been listening to Vol Views for any length of time, VIX is mostly all calls all the time. So seeing this many puts in the top 10 is certainly interesting. And number 10 is one of those puts. Cost you 202,000 contracts to break into the top 10 right now. That is nothing to sneeze at. That gets you to the D's 14 half puts. You like those, listeners? Maybe you prefer number 9, 203,000 of the Jan 22s. Number 8, also to the calls, 210,000 of the D's 20s. Number 7, right back to the downside, 227,000 of the D's 14 puts. Number 6, 233,000 of the Jan 17 puts. Number 5, 238,000 of the D's 15 puts. Then we got some calls here. Number 4, 246,000 of the Jan 30s. If that's a little bit too far out for you, how about number 3, 253,000 of the Jan 20s? And if you said to yourself, you know what? I need to go farther up the strike chain than that. We got number 2 for you, 275,000 of the Jan 50s, 5-0s. And then number 1 with the bullet yet again this week, listeners. The strike that I infamously said might be a bit of a bridge too far a few months ago, and now we're hanging out all over that range. This is the D's 13 put, 425,000 contracts on the table. At the end of the day, listeners, just goes to show, never undersell seasonality, especially around the holiday season. when it comes to the vol market. Hey, half of Europe's already on vacation, as we just established in the International Vol Review. But now it's time, listeners, to see what's lighting up the tape here on the weekly vol front. It is time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
All right, Mr. Rhoads, the floor is yours. What caught your eye on a relatively quiet holiday week?
So I had to do a trade myself to have something to talk about. How about that?
There you go.
And we'll get to that in a minute. Do what?
Providing your own content. I like it.
Well, kind of. I kind of like to trade, and I wanted to watch it, so I did something similar. And there wasn't anything to talk about on Monday. Tuesday, with VIX in the 14.25 to 1440 range or so, somebody sold 600 of the goodness gracious, the December 11th 15 calls for 12 cents or so. I think I got the strike wrong on that. And I think, it was the 14 calls. I apologize. The 14 calls were sold for 12 cents. And at the 15 calls were sold for 12 cents. I'm on fire today. VIX had a 14 handle at the time. This was late Tuesday before AM settlement for these options. As I mentioned, they're the 15 calls. They sold them for 12 cents. VRO came in at 13.68. So there were a lot of these owned. I feel like they were kind of trying to salvage the trade yet. And I hate that I have a typo here that got me all confused on the strike. It'll go more smoothly from here, I promise. On Wednesday, this was the trade that I kind of liked, and I sort of copied. Somebody came in Wednesday, and it's going to be our first January weekly option trade. Woohoo! With VIX at 1372, somebody sold 300 of the January 8th 12 calls for 4.25. And they bought the same number of 17 calls for $1.25. They took in a $3 credit. This thing makes money as long as VIX is under 15. And if you think volatility is going to be kind of quiet, maybe not the worst trade in the world. Late Thursday, with VIX in the 1370 to 1380 range, somebody came in and basically came in and sold a bunch of the January 8th calls. They sold 800 of them over 4 different 200 lot trades at an average of $1.63. We'll call it $1.63. So couldn't see if that was teamed up with anything else. And then finally got a call condor here, which I find kind of interesting. Not really wild about the risk reward, but it is what it is. I'm going to start from the bottom strike. They bought and this is through the end of the year. This is a December 31st expiring trade. They bought the 11.5 calls, sold the 12 calls, sort the 14.5 calls, and bought the 15 calls. That is a cost of 19 cents. The best case scenario for this trade is a reward of 31 cents. If the VIX settlement falls between 12 and 14.5. And I actually think the risk for that one is on the downside, because we're talking about, the day before, a holiday. And if we make it through the end of the year and we're making through the holidays and nothing has really changed geopolitically, I could see VIX settlement under 12 on that, on that weekly settlement that morning, quite easily.
Quite easily indeed. Well, are we putting up easy paper today, listeners, or is it a little bit harder? Let's go find out. Like we said, 407,000 contracts. That is nothing to sneeze at, especially this time of year, listeners. The big dog out there is 42, almost 43,000 of the March 70s, 7-0s. And before you get excited, it looks like that's part of a vertical. It's the March 3570 vertical going up today about 40-odd thousand times for around 58 cents. Kind of an interesting one. We thought we'd actually put it out to you folks, a little bit of a flash poll right now. Are you a buyer or a seller of that vertical at that price? And so far, the early voting, everyone wants to sell it. You want no part of the March 35.70 for 58 cents. So interesting out there. Number 3 today, we have 25,000 of the D16 calls. Number 4, 21,000 of the D's 15s. And rounding out the top 5 today, 18,000 of the Jan 21s. Going out to Thursday, it was the most respectable day of the week out here. 902,000 contracts on the tape. The big dog, the top 2 really, again, it's size, longer-term vertical season in VIX land right now, listeners, because yesterday the big dog was 100,000 of the Feb 30-60 verticals going up for about 52 cents, looks like. Paper buying the 30s and selling the 60s 100,000 times yesterday. So 52 cents for that one versus today we had the March 35.70 for 58 cents. Either one of those floats your boat, listeners. Apparently, I didn't get the memo, but apparently it is size vertical season here in VIX. Again, what does that tell us about expectations, perhaps concerns for the future of volatility? It certainly is intriguing. Number 3, 56,000 of the March 25s yesterday. Number 4, 53,000 of the March 20s. And number 5 yesterday, 43,000 of the D's 20. So it was all upside all the time there yesterday. So in spite of our talk, oh, by the way, there was a ratio put spread yesterday as well. There was the Jan 15, 13 half put spread going up 20,000 by 40,000 times. Looks like for about a 25-cent credit. So we were just saying not that long ago, how come we don't see a lot of size ratio put spreads to the downside in VIX? We have seen them in VSTOXX recently. Well, there's your Huckleberry, listeners. Jan 15, 13 half for about a 25-cent credit out there, listener. Are you a fan of that? You interested in that? Actually, no, it looks like about 35 cents, actually. So, yeah. And intriguing stuff nonetheless. Let's move on to Wednesday. 714,000 contracts on the tape. The big print, once again, size upside. Not a vertical this time, though, listeners. Just, actually, no, it looks like it was a vertical because this is the ratio we're used to seeing out here. First off, we see 100,000 of the Feb 40s. I was thrown off my game by all this straight upside lately, 1-to-1. We haven't seen that in a long time, and all of a sudden, that's what we're seeing all week. But Wednesday getting back to a sense of normalcy. Number 2, 34,000 of the Jan 40s. Number 3, 26,000 of the D's 14 puts. Then number 4, so buried away below it, is what we've come to expect now for VIX upside, which is the ratio. So 25,000 of the April 20s. So they did that vertical, the 2040 in April, 1/4. So do you like that better, listeners? Is that your Huckleberry? I mean, 2040, you are playing with a little fire there. We could easily, a couple of things go wrong, and all of a sudden we are threatening that 20 strike again, if not well through it. So kind of interesting. Obviously, you expect the 4 to kick in and make up for that at that point, but interesting nonetheless. You like that structure, listeners? 1/4, 2040, or do you prefer straight verticals? Do you prefer straight just buying VIX upside, or do you prefer not to play at all? Number 5 yesterday was 25,000 of the D's 13 half puts. Tuesday, kind of a light day, 489,000 contracts on the tape. The big dog, 31,000 of the D's 20s, followed by number 2, 26,000 of the Jan 21s. Number 3, 22,000 of the D's 16 puts. Number 4, 22,000 as well of the D's 21s. And number 5 on a pretty quiet Tuesday, 20,000 of the D's 35s. Interesting strike. And then Monday, also a banger, kind of coming out of the gate hot this week. 845,000 contracts on the tape. The big dog, 148,000 of the Jan 22s. Number 2, 100,000 of the June 42 halves. Number 3, 50,000 of the Feb 18s. Again, all that was opening, listeners. So size upside prints. Number 4, 32,000 of the D's 13 puts. And number 5, 28,000 of the Feb 17 calls. So a lot of paper all over the place. A lot of interesting upsides. So going back to what we were saying at the top of the show, whether you believe vol is a little too anemic, maybe you believe what Gary was saying earlier, that maybe we're just in that period right now where it doesn't matter what realized vol is going to do. Either way, we're seeing a whole bunch of VIX upside lighting up the tape this week. Mr. Rock Lobster, you were commenting on this earlier about how you've been noticing a lot of upside going up here this week as well. We've got straight up verticals. We've got our old pals the ratios. What was catching your eye, and what did you perhaps like of all the VIX upside we saw going up this week, sir?
Well, I have to say, it's not that I really liked it. It's just that it was happening. So a lot of Jan, just straight up Jan, hitting the upside. I'm just pulling up the strikes. The Jan 20 calls for around $1. Just a lot of very large volume, just straight up like old school call buying. So, and the reality is, it doesn't feel like it's, even though VVIX is a little higher than where we all think it should be. It doesn't feel like a 20 call is hugely expensive for $1, but you could buy 1525 call spreads for less than, hard to believe, 1525 call spread is about $1.50, and we have and with a 16 handle on the future, so you could buy the 16 put, and you could buy a 17 call. Let's see, it's 225. So you could buy 10-point upside strangles for about $1, $1.10 and put. So short answer is you could buy a strangle in VIX, and 85% of it is intrinsic value where the cash is right now. So like a 16 put and a 17, let's call it 17.25 call spread for less than 90 cents. So you look at that, and from a risk reward point of view, when I look at this now, I generally don't buy them now. I will wait as we just slide into expiration next week. But because like I said, you have heavier or a higher future price because we have that sort of rich future curve, just kind of just above our fair value. These type of strangles become, I think, great trades. Now, you still got to be mindful to close things when they move. And for a while, they could sit here for a long time, especially through the holiday, right? VIX goes from here down to 1325, and the strangle, like, it might not move for a couple of weeks, right? Of course, if there's an event, it moves fast. So anyway, I think from a pricing point of view, because there's a little bit of that upside call buying, the call spreads are inexpensive. And with a high future price, your puts are actually cheaper as well. So I know it's kind of funny to think about, but anyway, interesting pricing nonetheless, but still a lot of call buying in January.
So you're saying the hell with all that verticals and upside and ratios, you'd rather just buy your strangle for a little more money and get everything in both directions. What you're saying?
Basically, yeah. Yeah. Like the risk reward on these things are pretty good, and every once in a while they pay big. It's not everybody likes to trade like that, but I don't think it's a bad way to do things.
Well, our audience is warming, it seems like now, to that March vertical in VIX after most people wanted to sell it to kick off in the early voting, and is now swung the other way, which is kind of what I expected. 2/3 of you now want to buy that spread for 58 cents. Only a third want to sell it. It's one of those spreads, listeners. Are you really going to give up all that upside for 58 cents? It's one of those gun to your head. You probably have to buy it. You can't really sell it. So when we ask these, it's always kind of a little tongue-in-cheek, a little fun, but 2/3 of you grok into that fact right now. Let's go on out to SVIX land. Let's see what's grokking in the world of inverse vol, and not a heck of a lot right now, 29.5, so ticking down a whopping half a point at the start of the show. I'm sure if I re-racked it now, it'd probably be a little bit different. Again, SVIX, the problems besetting the options out here continue to manifest themselves out here. This thing cannot catch a volume bid to save its life. I mean, we were threatening 20,000 contracts a day, if not more, in this product not that long ago, listeners. And this thing continues to fall off a cliff. It's down another 1,300 contracts a day just this week. It is down to 3,700. At this point, it's going to be back to the very, very early days of SVIX pretty soon, doing a few hundred contracts a day. Luckily, that level is low enough that they finally hit it today. We're at exactly 3,700 contracts right now. So I don't know. I don't know what it's going to take to get people to trade options on this thing again. It seems like they have just abandoned it en masse. Mr. Rhoads, you were saying last week on the show that you just needed SVIX to close at $29.99. The vol gods did not smile upon you. They closed at $30.02. Talk about just twisting the knife. We made a fun half-joking tweet about that, but you said that actually you didn't get assigned, so you live to fight another day, sir.
I didn't get assigned. I kind of wish I did. Then I could have bought it back under 30, but I did not. Actually, it's funny where the official close that they use for options is based on the primary exchange where it trades. And I believe I think it's the SIBO exchange for this one. You would think it would be the SIBO exchange for this one. So sometimes you'll see a final print that's a little bit different. When I looked at my account on Saturday, I saw like 30. I saw 30 on Bloomberg. I saw 29.98 on my Interactive Brokers. So I wonder if that was the actual official close. But either way, I did not get them called away. And I am not short any 30 calls this week. I'm fully in that sucker, and I do have some. I'm short 30 calls on half of it for next week.
There you go. So 30.02. Here we come again.
Yeah.
For next week, Mr. Dark and Stormy Shores, sir. Same question for you. You guys have been rocking an inverse vol newsletter for the last few months. It's been a challenging period to be dealing with SVIX as it's kind of been doing its own thing and dwindling from a volume perspective. What's catching your eye out there on the inverse vol front this week, sir?
I would say yes to exactly what you said. Challenging also means not profitable for the 600 shares I own. So I am up a little bit on some shares, but we had some prior scalps that weren't so good. So what I would say is I'd see a lot of that volume is kind of dried up in the inverse vol. And the inverse vol products and vol products in general, like you look at the markets and VXX and stuff, still nowhere near what it was before they did all that schism with the bad management of the fund. So, I mean, I look at them, I do trade them when I think there is a lot more edge in them, but as a regular product, I have to say I trade them less now, except for the SVIX long we're holding. And at some point, VIX will stay in zone 1 for a while and they can make money again. But anyway, for right now, just challenging and illiquid, I would say. That's the easiest thing. And maybe UVIX coming up for a split, UVIX.
That's never going to happen until it gets to 25 cents. So I think they've laid that out at this point. They have no apparent inclination to ever want to reverse split this thing again. I don't know what's going on out there, but strange times afoot out there. Since we're talking about UVIX, listeners, UVIX at a 315 right now puts it up about a dime on the week. 20,000 contracts on the tape right now. The ADV is 33,000, also moving in the wrong direction, down 4,000. So obviously when we lay on SVIX, it's that time of year. Everything's given up some volume in the vol space right now, but SVIX seems to be singularly cursed by that issue right now. I mean, UVIX still does enough volume to be tradable. SVIX is getting to the point where it is, I think, to put it mildly, a little bit challenging. UVXY 19 even right now puts it up a whopping 1/4 point from where it was this time last week. 53,000 contracts on the tape. So all you UVXY Defense Force fans out there, you can celebrate your boys putting up some paper, even though 62,000 is the ADV. That's down quite a bit as well. That's down 5,000 on the week. And obviously UVXY used to put up a lot more paper, close to 100,000 a day. So everything in the vol space has kind of come in from the hot and heady days of August when everything was just putting up paper for days out here, listeners. What will it take to jumpstart SVIX from an options perspective again? I don't know. At this point, I do kind of wonder about that. And Mr. Dark and Stormy talking about everyone's favorite, good old VXX. Was at a 42.80 when we kicked off the show. Giving up nearly a half a point of that now, about 42.40, up about 0.6 of a point. In terms of volume, doing about 23,000 contracts right now. The ADV is 26,000, down 3,000. So again, it's that time of year. Everything's given up some paper. It's just a question of, can you remain active and viable while you're giving up all that paper? And It's starting to become questionable. If you look at some of those markets in the weeklies and SVIX listeners, not exactly lighting the world on fire. But you know what is lighting the world on fire? It is the crystal ball, listeners. So let's get to it.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everyone, welcome to the Crystal Ball, the portion of the show where we attempt to wrestle bravely, some might say foolishly, with the vol gods for the coming week, listeners. And, you know, as we've been talking here, we've seen vol slowly giving up the ghost. At the start of the show, we had VIX cash at about a 14 and a quarter, 14 and a quarter, giving up about a half a point now, right down to about a 13.76 as we're coming into the tail end of the show. Interestingly enough, that puts it pretty much even with VSTOXX where it closed at 13.75. So all of you who have been tweaking your models to get the exact right differential between VIX and VSTOXX, well, you have failed this week, as have a lot of us out here this week, as they are almost exactly equal coming into the tail end of the show. On the show last week, it was myself, it was Mr. Rhoads, it was the Oracle of New Hampshire, and the Meatball. And the closest actually, well, on VSTOXX, it was me at pretty much a bullseye. I was at 13.78, so I will put a bullseye note for myself. So my model working all right, listeners. Maybe not the way I intended, but working all right on the VSTOXX side. You'll hear when I get to my VIX in a second how well it worked there. And then on the VIX side, we had Matt at a 13.5. So he was closest, obviously not the winner. We have to be within a tenth of a point for our margin of victory, listeners. So we had some people dialing things in. And then on the rest of the VIX, I was the next closest at 12.68, so no joy for me. Russell was at 12.5, and the Meatball was at a 12.21, so no joy on the rest of the VIX side. On VSTOXX, we had Russell at a 14, and we had Mr. Meatball at a 13.31, and Matt was at a 15.5, so no joy for the rest of the players on VSTOXX. So since our visitor was the closest on VIX, I will allow Gary in our UVX hot seat the dubious honor of going first. Mr. Gary, what are you feeling for this time next week from a VIX and or a VSTOXX perspective, sir?
Yeah, interesting week coming up, obviously, with the Fed market obviously is thinking 25, which is most likely, but I think they've got an interesting framing to do. And we've got expiry as well. So there's a lot of, it's going to be an interesting week, but I am going to go VIX for this time next week at 12.5. I'm going to go VSTOXX a little higher. I'm going to go 12.7.
All right. I like it. I get what you're putting down there. And then next, I suppose it would be me. So we'll go in order of VIX. So I will go next. And yeah, it's kind of hard to argue with the seasonality we're seeing out there right now. It just seems to want to pull VIX sub driving range and keep it there for some time. A 12.5 can we get there? Listen, I don't know if I'm feeling quite that much to the downside. So I'm going to say we're going to still be in a 13 handle. I'm going to say we're at a 13.28 this time next week. All right, the next closest was Mr. Dr. VIX, sir. What are you feeling this time next week for VIX and VSTOXX?
Oh, where's the button? Where's the button? The button, I even wrote these down so I could remember them. I'm going for $12.99 for VIX and $13.99 for VSTOXX.
Going back to that 1 point differential, sir, huh?
Yeah.
All right. And you know what? I put myself down for the Meatball. I probably shouldn't do that. I pushed myself down for me. There we go. And then, because we have Mark in the notes and not Andrew. There we go. Let's fix that. All right. Now, Mr. Dark and Stormy Shores, sir, what are you feeling for this time next week for VIX and or VSTOXX?
Yeah, I want to go the seasonality, the Fed thing. Yeah, it's a tough one. It's tough for me. I honestly think VIX is going to be higher. So where are we right now? I'm going to say 14.25 and VSTOXX 25 points less. So like 14.
Oh, premium to VIX cash, she says. And by the way,
I know I'm going contra, even though I think it should be lower, but I don't think we should be here either. So
I just realized I neglected to do a VSTOXX, so I just wrote in while you were talking. 13 double for me on the VSTOXX side. So that is our market for this week. By the way, I love our chat. Some of them are declaring victory at the beginning of the show for the crystal ball. So they have learned. They have learned how to play the game. And
do that.
Before we go, Mr. Dark and Stormy Shores, sir, if folks want more option pit goodies, where should they go? What should they do?
Yes, optionpit.com, 888-TRADE-01. Get ready for my next Flash 10. That's probably going to come next year. This one was so ridiculously successful that people are actually screaming at me to do it again, so I will. Crazy returns. And of course, I do all the trades in Option Pit myself. So if you want to learn to trade options with somebody who actually trades the options, come to optionpit.com because that is what we do every day.
Check them out. Give our best wishes to Mama Lobster, sir.
Thank you, sir.
As we keep on rolling. Gary, you get the Trooper Award for staying up late. We'll let you go to bed now. Before we go, sir, if folks want to check out what is cooking at NN Squared Capital, where should they go? What should they do?
Yeah, nnsquared.com. And we're actually having a little webinar on Monday night, my time, Monday afternoon, yours, a couple of things we're going to point out about the VIX as well. So if people want to contact me and for an invite, I'm happy to add people.
There you go. Check them out, listeners. NN Squared is the place to go to kick the tires and light the fires. Look them up if you want to learn more. And Mr. Rhoads, where should they go if they want to keep up with your latest vol musings, sir?
Well, it's funny Gary mentioned that because I was going to send him a message and ask if I could listen to that webinar. I saw it on his LinkedIn page, so I will. You'll be hearing from me. And then, as far as what I'm up to, I'm taking a couple of weeks off. Go me to honestly, I'm taking a couple of weeks off to finish a book that should be out hopefully in May about Mr. Buffett. But in the meantime, I'm doing a volatility review for VSTOXX over the last couple of years at Interactive Brokers on behalf of our friends at UVIX. And I think some of your listeners might get some information about that from the UVIX folks. I was hoping to have the actual link today, but I do not have it quite yet. But January 9th, not at a time that there is anything on the Option Insider Network. I always make sure that I don't overlap with their times, which is hard because there's so many programs.
There's so much stuff. I get it. But we appreciate you putting the effort. Go forth and enjoy your rest, sir. You have earned it. We will speak to you in the new year, and we'll look forward to that webinar, talking all things VSTOXX on January 9th, listeners. Mark it down in your calendar. While we're talking VSTOXX, you know where to go to learn more about all things VSTOXX. Urx.com/VSTOXX, VSTOXX, the place to go to learn more. That'll get you links to Russell's previous session he did with them and everything else. I'm sure eventually this upcoming session will be there as well, linked to it. So all sorts of fun there, urx.com/VSTOXX. And while we're plugging things, of course, if you want to help the show directly, public.com/VV. It is literally the easiest landing page we've ever had to promote the folks at Public. Like you folks in the vol space, they want to lure you to the dark side of their brand spanking new Public platform. The easiest way to see what they're all about, public.com/VV. It supports the show that's been coming to you for well over a decade, listeners. And let them know, hey, you're coming from Vol Views, and maybe while you're there, you collect a rebate to trade a little vol. It's not the worst thing. Public.com/VV is the place to go to kick the tires and light the fires. We have to get on out of here, listeners. Back again in a little bit with our good buddy, the Options Guy, to break down everything in the world of unusual activity. If you want to get your hot little hands/air holes on it, only one place to go, theoptionsinsider.com/pro. Then I'm finally off for the weekend. I get to join Mr. Rhoads. I don't have quite the extended vacation he does, though, because I'm back again on Monday all the way through to Friday, another episode of Volatility Views. Stay safe out there, everybody.
Are you paying too much to trade options? If you're not trading on public.com, the answer is yes. Public is the only platform where you can earn a rebate on every option contract traded, and that's in addition to no commissions or per contract fees. There's no one else out there paying trading rebates, so you won't find a better deal. Bottom line, if you're paying more than $0 to place an options trade, then you're paying too much. Switch to Public and start getting rebates on every single contract traded, only at public.com. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views. The International Volatility segment is brought to you by Eurex, home of Euro stocks, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European volatility benchmark, at www.eurex.com/VSTOXX. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.